Welcome to Growing in Grace. We're glad that you've joined this podcast today. We have a timely subject to talk about today. Today we have a special guest, and what we would like for you to do before we begin in this session, we would like for you to go ahead, call your neighbors and your friends, and since you love your enemies, if you've been a part of this podcast, you probably started growing in grace and started loving your enemies. Give them a call too, because we have some information that's going to be very informative and helpful during this season. We're about to get into the tax season, and so we have taxes and finances, and we want you to beware of the pitfalls and be aware of what you should and shouldn't do during this time, during this season. And we have a special guest with us today, and she's a CPA of the InTouch tax firm, and this is Leo Walker.
Yes,
And we're so glad to have you with us today.
nice to be here.
Nice to see you, meet you, and to begin to get to know you a little bit before we started
Okay.
today. It's good to see you today, and thank you for sharing some of your time with us. And I believe you're going to share some great knowledge that's going to be helpful during this time, during this season.
Absolutely.
Before we get started, even in the scriptures, Jesus talked about what belongs to Caesar, give it to him.
That's it.
And the thing that belongs to God, give it to him. And so in this season, we don't have Caesar, we got Uncle Sam.
That's it.
And Uncle Sam be wanting some of our stuff.
Absolutely.
he want his cut.
Absolutely.
So, and when Uncle Sam don't get his cut, he get upset.
Absolutely.
And he might come see us. And so, can you begin to share with us some things you like to open with that we should be concerned or be aware of during this season?
Of course. So, my biggest thing with clients and non-clients is compliance. And I think that's what we struggle with the most. And one might say, Leo, what do you mean by compliance? So, when you work on a job, there is a form that they give you called a W-4. It used to be back in the day we could play, I say, Tricky Ricky with that form and kind of play with the numbers a little bit.
That's the withholdings.
That is withholdings. It is
Yes.
absolutely correct. Now they have changed the W-4 form. So now because the W-4 form has changed, now you are not able to kind of finagle those numbers like you used to do a couple of years ago. So what I've run into this year with a lot of clients is we work all year, we get bonuses, and then we do zero withholdings. And when then you come see me and you're like, Leo, where's my refund? Where's my money? And I say to you, you got it already. And you're like, what do you mean? You remember when you went online and you changed that form and you had $0 coming out? You got your money already. Now you owe Uncle Sam some money. And they're like, what do you mean I owe? Well, if you make $50,000 and you have little to no taxes coming out, you're going to write a check.
Yes.
My philosophy in my office is, you ain't killed nobody. You just owe Uncle Sam. So it's time to pay up. What I try to do with my clients every year, this is a service that I offer, send me a copy of your pay stub. Let's see where we are. Let's see where you are. Because if you wait until August, you wait until September, you're too late. I've found that this year, more than any other year, people are writing checks. And as a people and as a body, it disturbs me because we are educated people, but yet we don't take advantage of the education that we have. I will tell you, it is not like the days of old. You know, the older your children get, the less money you get from taxes. People are now living in the after COVID era. When COVID was going on, the government was handing out a lot of money, a whole lot of money. Now that we're no longer in that COVID stage, now the government is taking back a lot of money.
We're paying for the stimulus.
We are definitely paying for the stimulus money. But what people fail to realize is, and I don't do politics, Oh, well, it's Biden. No, it's not Biden.
Mm-hmm.
All of these laws were put into place pre Biden.
Mm-hmm.
Every law that's in place has an expiration date.
Mm-hmm.
Those laws were due to expire in 2023 at the end. So now what we're seeing is all of the credits that we got, they have now expired. Now, had we still been in a catastrophic era, they may have extended them, but they think, well, society's back to normal, so now we're going to have an expiration date.
Mm-hmm.
All of that money that people were getting for the kids, 2,000 extra, 3,000 extra,
Mm-hmm.
now it's back to normal.
Mm-hmm.
People don't realize once your child ages out, and when I say age out, after they turn 16, the government no longer sees them as a child.
Mm-hmm.
So you no longer get the child tax credit,
Mm-hmm.
which could run you an upwards of $1,000, $1,500.
Mm-hmm.
COVID, it was about 2,000. So all of that money that you were getting, now you're losing. And you ask the question, well, Leo, what have you done?
Mm-hmm.
Well, I didn't do anything.
Mm-hmm.
The question is, what did you do to circumvent this money that you now owe? And it is hard. And I will say that when you come in my office and you're like, what do you mean I owe $3,000? I'm used to getting money back.
Mm-hmm.
And I look at the W 2 and I say, yeah, that was pre COVID.
Mm-hmm.
And you made 50,000 and you only had $2,000 to come out.
Mm-hmm.
The normal rationale is 10%
Mm-hmm.
for federal, 6% for state. And they said, well, I got kids. That's fine, but it just depends on the age of the kids.
Mm-hmm.
It depends on whether you have daycare. It depends on whether you have childcare expenses. So all of those things take a factor when you're doing your taxes. Every year, the itemization amount goes up.
Mm-hmm.
The itemization amount is this amount right here, if you make $50,000, and depending on your filing status, every filing status has a different itemization amount. The government will allow you, if you make $50,000 and you file head of household, which means you have one person in the house with you. And let me be clear, because a lot of people are misconstrued. Head of household doesn't necessarily mean that it's a child in your house.
Mm-hmm.
It could be an adult in your house,
Mm-hmm.
okay? That adult quantifies you to file head of household, okay?
Mm-hmm.
Because there's an additional person in your house that you're paying to help, okay? But if it's two people in the house, one person makes 50,000 and the other person makes 50,000. No,
Mm-hmm.
because you're not paying for that person.
Mm-hmm.
You can do head of household with an additional person, but that's something that you have to speak to that other person about because you need their social security number, date of birth, all that other good stuff.
Mm-hmm.
Now, when they were giving out all of this money, if you had a dependent on there, that dependent didn't get the money depending on what they statute for the stimulus money.
Mm-hmm.
So a lot of people were getting upset because it's like, I didn't get my stimulus check. Yeah, because somebody claimed you on their taxes.
Somebody's taking care of you.
Exactly.
According to what's
the government.
Exactly.
Even though I'm taking it well, that was the gray area,
Mm-hmm.
and it caused a lot of divide.
Mm-hmm. Mm-hmm.
Because people were upset.
Mm-hmm.
And I tell people all the time, you can't be not married when it
Mm-hmm.
comes to taxes,
Mm-hmm.
and then you're married during the year.
Right.
Okay? So when it comes to taxes, oh, I'm going to file head of household because I got a dependent.
Mm-hmm.
Well, you got a whole husband.
Mm-hmm.
So technically, I have to be not the IRS police, but I am your police.
Yes, because you're helping them to avoid audits, or if they were audited, overcome it.
Absolutely.
And you have to be proactive in that.
And not reactive.
Exactly.
And I tell people, you got married for a reason.
Mm-hmm.
Okay? At the end of the day, we don't want to defraud the government.
Mm-hmm.
Because when you do things like that, it comes back. The government has 10 years
Mm-hmm.
to come back at you. They only have 3 years to give you your refund.
Mm-hmm.
So we kind of see how that weighs out.
Yeah.
So you got to be very careful what you put on your tax return.
Mm-hmm.
And they changed the laws a few years ago. As your CPA, as your accountant, as your preparer, they find me.
Mm-hmm.
If they find that I've done something unscrupulous,
Mm-hmm.
erroneous, then I can get $1,000 fine per return.
Mm-hmm.
That's just one fine. But it depends on the infraction because we could get fined 5,000, 10,000. Guess what? You're not paying me that. So there's a fine line now
Yeah,
when
yeah.
it comes to what you're putting on there because then they'll come see me in my office and say, hey, we need to see your books.
Yes, yes, and because down there at the bottom, I prepare my own taxes, but there is a place where you can say whether they've been professionally prepared,
Absolutely.
and as a professional, you are held to a higher standard
Absolutely.
than a individual preparing their own.
Absolutely.
Yes.
And it makes a difference. And I'm glad you said I prepare my own taxes. This is my caveat to that. And I tell people all the day you have a profession, you're a pastor. I couldn't pastor. That's not my forte, that's not what I do. I do taxes, I do numbers. What people fail to realize is guess what? I am constantly going to continuing education classes. I'm going to class to get up on the latest laws. If you don't have a 1, 2, 3 return, please don't try to do it yourself because laws are constantly changing and because we're privy to it and we're on top of what legislation has going on, then I advise everybody get some professional help because if you make a mistake, it comes back on you. If I make a mistake, guess what? I pay you for the mistake that I make.
I see.
That's the thing with that. And you want to get that help because I might know a little bit more because the laws are constantly changing. You may be doing yourself a disservice because there may be something that changed that you're not privy to, and now you're losing money.
Well, I'll share something. I did for a few years miss out on a credit. And it just so happened that I was doing my taxes and I was able to file an amendment
Yes.
for 3 years. But I was about to expire on my amendment on one of the years.
Absolutely.
And it's where my child was going to school, and I failed to file the
1098T.
yes,
The
for the
education credit.
education credit, and that was actually significant.
Absolutely.
And I praise God. What happened is I was having an issue with filing that particular year, and I called somebody about it, and they was walking through it, and it was a professional again,
See?
and it says, I see here that you did not file for this.
Absolutely.
And I went back and I began to look at it, and just so happened I got the right advice. But I do see the value of the professional because had I had that professional in the first place, I probably wouldn't have missed those credits.
Absolutely. And that could be up to $1,500.
Yes.
So that's quite a substantial amount of money. The blessing is it's kind of like a savings account once you got it.
Yes. Actually, they paid me interest for that.
Absolutely.
Which I wasn't expecting. Thank you, Uncle Sam.
Yes. Yes. Yes, they believe in that. And that's another people don't realize if they owe you money and they don't pay you timely,
Yes.
they have to pay you interest.
Yes.
And it's the same thing with you.
Yeah.
If you owe them money
they're going to get you.
and you do not pay them timely, you owe them interest.
And penalties.
You do. And the penalties sometimes can be more than what you owe them, depending on how many years you have to go back. And that's why I tell people, a lot of people are like, I don't want to file because I know I owe. Well, it's better to know the known than to know the unknown. And you don't know whether or not you owe until you get them done.
Yes.
I've got people that said, oh, well, I haven't filed because, Leo, I just had it last week. And I said, listen, they owe you money.
Yeah.
I said, but the statute of limitation now has expired. So you just physically gave the IRS $3,000. And she was like, what? I said, the thing is, we have to be diligent because they only got 3 years to pay you. And she was like, what do you mean? There's nothing you can do.
Yeah.
There is absolutely nothing.
The scripture says this. It says, my people are destroyed for lack of knowledge.
That's absolutely.
And sometimes what you don't know can hurt you. And one of the things I like to do is I'll do a trial on my taxes to see whether I want to pay, see whether I want to file in February or do I want to file in April.
Well, let me give you I'm gonna give you some hints.
Okay.
It doesn't matter if you file in February or April. You can file in February.
Yes.
It's still due in April.
Uh, okay. So, what you're saying to me is that if I owe in February, I don't have to pay until April.
April 15th.
Okay. Okay. But that's normally what I do though. If I do a refund, okay, let's go.
See?
If I know I have to pay April 14th.
Okay. But see, this is what I tell people. They don't realize the day starts April 15th. Period. If you don't have it paid by that date,
Yes.
depending on when it falls. If it falls on a weekend, then it's April 17th. If you don't have it paid that day, interest starts accruing.
Yes.
They don't care if you filed it on the 14th. They want their money by the 15th. So that's why I say, whether you owe or not, you can do it in January. You don't have you got until April to pay it. So let's go ahead and get it done in January, because then we can wrap our brain around, okay, I've got this bill and I've got to pay it by April 15th. And what I try to do is give them a guideline. Hey, listen, we do your taxes in January. If you owe $3,000, let's just throw that number out there, then let's take bite-sized pieces. I break everything down in bite-sized pieces, because if you're owing a lot of money, you're gonna just go into a panic attack. And I'm like, there's no need to panic. It's okay. It's okay to owe. It's not okay not to pay. So even if you pay after April, if you set a guideline for yourself and say, I owe $3,000, I know I'm not going to have it in April. I'll say every time you get paid, there's a tool on irs.gov where you can go on there and make a payment anytime you feel like it. They don't penalize you for it. They don't charge you unless you're paying with a credit card or a debit card. But if you pay using your bank account, that service is free.
Wow.
And I also say, hey, listen, if you owe and you don't know what to do, call me. I'll walk you through it so that you can get used to doing it. Not that I want you to owe, but then that way, when you get some extra money, you can just pop it on that bill. It's just like a light bill. It's just like a gas bill.
Right.
But what I try to do before we get to that point is, let's get educated about how much taxes we need coming out.
Yes.
The biggest thing is, let's not, when we get our bonus, let's not file exempt. Because it's give unto Caesar what is due to Caesar. If you do it the right way, then we won't write any checks.
Yes, and so here's what I understand. I've heard other financial advisors say that when you receive a check from Uncle Sam, basically what you've done is, in effect, given them
Too much money.
And you've given them an interest-free loan, whereas you could have put that money somewhere where you could have actually gained interest off of it. But can you speak to that?
I
that
can.
Philosophy.
What I do is I gauge my clients. Okay, if you are someone that you're not savvy as far as finances, bills, you know whether or not you can put up $1,500 and not touch it. A lot of people can't do that. And because they can't do that, it's better for you to go ahead and pay in and get it back. Because what happens is, a lot of people, when they get the money back, then that's when I'm going to take my child on a vacation. I'm going to go buy some school stuff. I'm going to get a car. If you were not taxed properly, then you got to write a check that now, guess what, you can't afford to write. That's number one. Number two, because laws are changing, if you don't have enough coming out and Congress votes for something, you could be stuck in the middle because you didn't have enough coming out. So that's the caveat to that. Yes, it's better to hold your own money, but we all know things happen. Bills occur. Situations, emergency. My car broke down. My furnace broke down. My AC broke down. Now I need to take that $5,000 that I was not putting into the government. Now I need to take that money. So now guess what? You're left with no money in savings, and now you're left with no refund. So it's better to pay in and depend on that pay in than to say, oh, I'm going to hold it and then something happens.
Well, but there's another
Caveat.
line along the spectrum, whereas you try to break even. See, so because you're on the other spectrum where it's like side of the spectrum where it's almost like a little quasi savings.
Yes.
And then the other side is where you are saving. The other side is where you hold your cash, and then at the end you just make that lump sum payment. But then there's this middle place where you're trying to not owe. If you owe $5 and they owe you $5, okay, hey,
that's different.
You
yeah.
see,
Yeah.
and so how can a person get to that caveat? And what do you say about that?
Well,
that,
you
that
actually,
position?
and to be honest with you, you can't. And the reason why I say you can't pinpoint it,
Uh-huh.
because the itemization amount goes up every year.
Yeah.
We don't know what it's going to be.
So when is that known then? When is that known for the tax season, for the tax year? When is that known?
January.
Really? That's too late.
It is.
It's
too late for you.
Well,
but it's not too late for the government.
Yeah. To finagle and finesse to know how to do that. Yeah, that's too late for us to prepare and plan for that. Okay.
Normally it goes up about $1,500.
Okay.
Every year.
Uh-huh.
But then once again, we have, say for example, and I'm going to give you an example. Most people don't itemize anymore. And they don't itemize because the exemption amount is so high now, and that's by divine order for the government. Because it used to be your exemption amount was low, so everybody had enough to itemize. Now, it's hard to get that $27,000 threshold if you're married, filing joint, unless you have a huge mortgage. Unless you give a lot of money to the Lord. Hello. You know what I'm saying? It's hard
to
yes, it is hard to hit that threshold because the average mortgage interest that I've seen is not $20,000 and $30,000 unless you're just buying a house now. Then if you are, then yes, it's going to be that because the interest rate is so high. But if you're a seasoned adult, you're almost 15 years into paying for your house. So your mortgage interest is going down. Okay. Your property taxes may be going up, but your mortgage interest is going down. So if you're married, filing joint, and let's just say your income is $100,000 between the two of you, well, you've almost got your house paid off, and you owe $142,000. So your interest is, let's say, $17,000. Unless you're giving your 10% to Jesus. You're not going to meet that threshold. And a lot of people are under the misconception, well, I got a lot of medical bills. You do not get 100% for medical bills.
Yes, there's a form that you have to file.
There is.
And then it is a percentage of that you're able to deduct.
Absolutely. And we don't understand that. Well, I spent $13,000. Well, sweetheart, you don't get all of that. You get a percentage based on your return, based on how much you make, based on how you're filing. So all of those things come into play, and a lot of people are not able to itemize. So you're not getting that advantage where you can itemize more than what it is. So now it turns into a disadvantage. I tell all my young people, if you start out right the first time, in the beginning, if I get a new client and they're in their 20s, I have to see you physically in my face. Because I need to now educate you on what the right thing is to do. If I don't see you, I can't educate you. And I want you educated because what I pour into you now, I know that you should carry this out when you get grown, when you graduate from college, when you get married, when you have your children. And then that way, guess what? You'll say in the back of your mind, well, Miss Leo said do it this way. But if you come into my office and you get a $141 refund, and you're like, wait a minute, Miss Leo, where's my money? Sweetheart, you got it during the year because you didn't file properly. And then a lot of people say, well, my friend said I can file exempt, or they said. And my next question is, who is they said?
Who's they?
Who is they?
And how much are they contributing to your tax bill?
Absolutely. And everybody has a different status quo. Now, if you've got 4 kids and I've got 0 kids, I may be able to file exempt, depending on how much money I make. Now, you could have 4 kids and you make $70,000. Well, you no longer qualify for earned income credit because it cuts off at a certain amount. Okay? Now, you could make $18,000 and get $9,000 back. But then what you're going to call and say, Miss Leo, my friend got $9,000 back. Where's my money? And I'm like, how much did you make? Because your friend didn't tell you how much they made.
Right. They just tell you how much their refund was.
Absolutely. And
Uh-huh.
it makes a difference.
Right.
So a lot of people are in the gray with that.
Mm-hmm.
And I tell people, you can't compare
Yes.
your situation to someone else's situation
Mm-hmm.
because they may be itemizing, they might have a house, they may give their 10% to God,
Mm-hmm.
they may have went out and bought a new car, and when you buy a new vehicle you get credit for that Avalon one-time tax that you pay in the state of Georgia.
Mm-hmm.
So that may throw you over the threshold.
Yes.
And they'll say, "Well, I gave a lot of money to a lot of stuff to Goodwill."
Mm-hmm. Mm-hmm.
You get a percentage.
Yes, yes. And another thing is sometimes a person in this day and time, they actually could have a 1099 where they've done Uber, Lyft, and DoorDash, and some of these
Absolutely.
other things. And actually, if you file properly, and that's where you might need a professional if you're not savvy enough, there are deductions that you should be taking for business expenses
It is.
because basically you're operating a business.
It is.
And so that's not a W 2. A 1099 is not a W 2.
It's completely different.
It's completely different. And then there are certain sets of forms that you need to file to get your tax in alignment because
Absolutely.
that 1099 is really like a complete revenue that you receive,
It is.
but it doesn't take out the expenses, and you're responsible for doing
It is
that.
non-taxable
Yes.
income at the time, and you have to pay it on the back end, and that
Yes.
is what we call self-employment taxes.
Yes.
Because now you are your own boss.
Yes.
And what we fail to realize is being our own boss, people don't understand your Social Security that you put in when you're a W-2er.
Mm-hmm.
That's what you have to put in when you're a 1099er.
Mm-hmm.
And you can't, and I tell them, you can't say, I want a lot of money back, but I don't want to claim all the money. It's an oxymoron. Because if you don't claim all the money, then you have little to nothing going in Social Security.
Yes.
So then when you turn 65, 70 and a half, and you like, my Social Security check only $900, well, that's because guess what? You didn't file on all the money that you claim.
Mm-hmm.
And that brings me over to the next topic.
Mm-hmm.
They set out some new rules. If you are using Cash App,
Yes.
they're going to start taxing you.
Mm-hmm.
Cash App, you're going to get taxed. Venmo, you're going to get taxed. Square, you're going to get taxed. Okay? What they did, they had rolled it out for 2023.
Mm-hmm.
And then Congress was like, wait a minute, this might be too soon.
Mm-hmm.
Because guess what?
Mm-hmm.
We're not ready for that.
Mm-hmm.
Because now what you got is a whole big entire mess.
Mm-hmm.
So what they said was, we're going to forego this now.
Mm-hmm.
And we're going to wait 24, 25.
Mm-hmm.
And then we're going to start taxing you. So the problem with that is, I could send you some money, Cash App,
Mm-hmm.
because I borrowed $50. Okay, I'm going to send you your $50 back.
Mm-hmm.
The IRS doesn't know that I borrowed this money from you.
Yes, just because you are receiving cash out money, that doesn't mean that's revenue or income.
But you're still going to get a 1099.
Really?
Yes, sir.
For
And
all transactions,
all transactions.
that you receive from
Yes.
Cash App.
so what has to happen now
Wow.
is, now we, as the professionals, have to have an interview with you and say, hey, how much of this money was actually for a business? Because they're classifying it with the 1099K that you're running a business.
Mm-hmm.
So it gets a little bit cumbersome and complicated because now we have to decipher what's really going on.
Mm-hmm.
And that 1099 is now reported to the Internal Revenue Service.
Yeah.
Now, what happens when you file your taxes and you leave something off? You get this nice, nasty letter in the mail
Mm-hmm.
from the Internal Revenue Service, and they say, hey, listen, you left this off of your tax return.
Mm-hmm.
And you're like, whoa, wait a minute, I don't know what happened.
Mm-hmm.
Now you have to go through that and kind of decipher what's right, what's wrong. And that's why I say, if you're doing your own taxes, you got to know what you're doing.
Mm-hmm.
And you've got to be up on the laws and what's going on.
Mm-hmm.
Because those 1099s, they are coming.
Mm-hmm.
And they are coming with a serious vengeance. And also, if you sell something, because now people are selling a lot of things,
Yeah,
you
eBay.
know, eBay, I'm going to sell this, I'm going to make some money.
Uh-huh.
That money is taxable income. The only way it's non-taxable is you bought that suit for $500.
Mm-hmm.
You now sell that suit for $100. The government won't claim any money on that because
You
you
told them the
lost
loss.
money.
Yeah.
Yes.
Mm-hmm.
But you can't count that loss.
Mm-hmm.
Okay? But people will say, "Oh, well that's just what I'll do then." No, 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 no. Trust me, there's ways.
Mm-hmm.
You know when you do Cash App, there's a memo section.
Yes.
Okay? If you put in that memo section, it's for goods and services. If I do your taxes and you say I'm going to pay you Cash App and you put on there taxes, I have to count that as income. There's no deciphering whatsoever. So you got to be careful, and it's a gray area. Trust me, it's very gray.
Mm-hmm.
The only thing that they don't count is Zelle,
Mm-hmm.
and Zelle is transfer to transfer. You
Mm-hmm.
know, Dad, I'm going to transfer you. I'm going to Zelle you $100. Okay,
Mm-hmm.
sweetie, I'm going to Zelle you. That's the only money that they don't count.
Wow. So you're saying that between children, because at one time I was taking care of my daughter's. She was in college,
Hmm.
and so I was sending her a sizable amount on a monthly basis. In fact, I started making a little humor about it. I says, what do I call that? Child support. That's what I put on the lines in child support.
Oh gosh.
Yeah, she's my
Yeah, exactly. Yeah,
you
I
know,
get it. I get
but
it.
yeah. But it was sizable.
Yeah,
I mean, so if somebody's doing that, that could be very bad.
it is.
That could be tens of thousands of dollars over the course of a year. Um, so basically, you're saying they should really be looking at going to Zelle to do those child support or
Absolutely.
child care or
Absolutely.
whatever.
Mom, I need some money. Okay, I'll
Yeah,
Zelle you.
Zelle, yeah.
Yeah, that is your only grace. And they may change it because
Yeah.
the
Now,
government wants a piece
they're
of
trying to capture.
they want a piece of the
They see
pie.
that market and they know that some things nefarious are going on.
Absolutely.
Some business transactions are going through that route, and they want to capture the revenue.
Absolutely.
Yeah.
And to be honest with you,
Mm-hmm.
that's just the law of the land. They
Mm-hmm.
want a piece of your pie.
Mm-hmm.
And that's what it is. And I
Mm-hmm.
even tell parishioners, because I'm a trustee at my
Mm-hmm.
church
Mm-hmm.
and I do the finances. Hey, listen, if you're paying your tithes or your offering through those avenues, guess what? The government's taxing. Because if you say, I'm going to send $500 via Cash App
Mm-hmm.
and I want to send it to the church doesn't get that whole $500.
Mm-hmm.
They get a portion of it.
Mm-hmm.
You get credit as the parishioner for the 500. So I want you to be cognizant of that as well. You get credit for 500, but the organization doesn't get the whole amount.
Mm-hmm.
So we have to be careful what we're doing so that we can capture and gain, because you want everything to go where you want it to
Where you
go.
want it to go.
So I tell them, Zelle, you can't do it with business. It's
Mm-hmm.
some banks won't allow you to do Zelle from business to personal or business to business.
Mm-hmm.
They'll let you do ACH, but some of them may not let you do Zelle. So if you want to give money to the church, guess what? Write a check or get a money order
Mm-hmm.
or pay cash or do something like that, so that now the church isn't shortchanged,
Mm-hmm.
because that percentage could be 4.9%,
Mm-hmm.
and it could be high. If you're giving $600 for your tithes and the government turns around and takes 5%, then guess what? The church is losing that money,
Mm-hmm.
because the church has to pay for those card services as well.
So I do better to just write the check.
Write the check. And another thing, if you ever get audited,
Mm-hmm.
if you get audited, and I'll say this, I was with somebody that's very near and dear to me, and I'm not going to say who.
Mm-hmm.
They got audited for their contributions to the church.
Mm-hmm.
We had to go to the IRS,
Mm-hmm.
and they sat down and they had the printout, because churches have to supply the printout,
Mm-hmm.
and they checked. You said on this date you wrote a check for X, Y, and Z. I need to see your cancel check. So don't think you can just do it and say I did it,
Mm-hmm.
because if you're ever faced with an audit, you have to show proof.
Yes.
They showed proof. We were great.
Mm-hmm.
You're welcome, Mom and Dad.
Mm-hmm.
But at the end of the day, it happens.
Now with Cash App, you can do an extraction of
Exactly.
that data, and it'll it has
Exactly.
yeah.
But if you send pastor some money,
Mm-hmm.
you're not sending it to the church. You're sending
Mm-hmm.
it to pastor.
Mm-hmm.
So it's got to be identified.
Mm-hmm.
And another thing, and we're going so many different ways,
Mm-hmm.
as a church, if you don't have a 501c,
Mm-hmm.
It's not tax deductible.
Mm-hmm.
You
Mm-hmm.
know, we have a lot of organizations that have not done their 501s.
Yes.
And somebody was faced, one of my customers, hey, Leo, I gave this money to the church. When you go, or they ask you, they have a whole list on the IRS website who's slated as a nonprofit organization.
Mm-hmm.
If their number doesn't pop up, even though it's a church, if they haven't done what they need to do to get their 501c information, it's non-taxable.
Mm-hmm.
It's
It's
taxable.
taxable.
So you have to make sure all the I's are dotted and the
Mm-hmm.
T's are crossed. Because God forbid if you give your church $20,000
Mm-hmm.
and they don't have that paperwork
Mm-hmm.
filled out properly and you get audited, you lose the contributions that you're getting. So it's kind of important and it's a twofold. And I tell people taxes work hand in hand with your finances at home,
Mm-hmm.
your finances at church. Everything works together because it's not that you necessarily want credit, but you want to make sure that you're within the guidelines and the laws of the land so that you're not penalized.
Yes.
So that's the biggest thing.
Yes. And the beautiful thing is that you are able to contribute and receive the benefit of that contribution, so that actually it allows you to have more so you can give more.
Absolutely.
Because when you are penalized, then that takes away from your ability to give.
Absolutely. In
So,
every avenue.
yeah.
So, I tell everybody, and the more you give,
Mm-hmm.
the more God gives back to you.
Mm-hmm.
Pressed down, shaken together, running over. Because
Mm-hmm.
a lot of people are like, well, why would I? You're giving not just for man, you're giving unto God.
Mm-hmm.
So my office is not just a tax,
Mm-hmm.
it's a ministry.
Mm-hmm.
And I'm in ministry to educate you on what to do
Mm-hmm.
as far as finances go. I'm educating you on what to do as far as credit goes. I'm educating you on what to do as home buying, because if you've been coming in my office year after year and I don't see a mortgage statement, then we're going to talk about something different.
Mm-hmm.
And now we're going to talk about, hey, why haven't you thought about buying a house? It's an investment.
Mm-hmm.
It's something that you're leaving for your children. So let's talk about that. So it's not just a one stop shop,
Mm-hmm.
it's a roundabout thing. And if
Mm-hmm.
you're going to somebody and they're not educating you as far as finances in every aspect,
Mm-hmm.
start asking the questions
Yes.
because you need that knowledge. You need to know, what do I do if I get a large sum of money?
Mm-hmm.
What do I do if somebody in my family passes? Is this money taxable if I get a life insurance benefit? No, it's not.
Mm-hmm.
Is this money taxable if I get into a car accident? No, it's not. Is this money taxable if I sell a property? Whoa, yes, it is.
Mm-hmm.
Now you have to pay capital gains tax.
Mm-hmm.
And it's like, what do you mean? Because you've made money off of this property. Now, guess what? Uncle Sam
Mm-hmm.
wants a piece of the money
Mm-hmm.
that you've now made, that you've deducted from your taxes for all of these years. So now they want a piece of that money back.
Mm-hmm.
And it could be upwards to thousands of dollars, 10, 20, because now the market is great.
Mm-hmm.
I bought my house, Leo, for $180,000, and now I'm going to sell my house for $500,000. Well, make sure you're ready to write that $75,000 check
Mm-hmm.
for capital gains because now you've made money on your investment
Mm-hmm.
and Uncle Sam wants a piece of it. Well, I don't think that's fair. Well, why not?
Mm-hmm.
Why not? You've written off all the interest.
Mm-hmm.
Why do you think it's not fair? So I kind of have to have, a double hat and
Mm-hmm.
kind of bring it down. Listen, we don't want to get upset. But, that's why I counsel you and say, hey, if you decide to sell this property,
Mm-hmm.
you got to pay capital gains tax.
Mm-hmm.
And capital gains tax is just not that one tax. It's also based on your income. So think about like this. If you made $285,000 on a property that you sold,
Mm-hmm.
and now you don't have enough taxes coming out,
Mm-hmm.
now you got a double whammy
Mm-hmm.
because now you're paying capital gains tax and you're short with giving Uncle Sam his money. So now you're looking at 60, 70,000, and you're like, "Whoa, I don't have the money." Well, why not? You just made $275,000.
Mm-hmm.
Well, I did such and such. Well, that's a you
Yeah.
problem.
Yeah.
Uncle Sam doesn't care about your problems.
So sometimes a person will make that transaction and say, "Hey, I'm getting a Lexus. I'm getting this or that," and they make a purchase not considering their tax liability.
Absolutely.
Mm-hmm.
Absolutely. I had a dear client. She sold a business.
Mm-hmm.
Her taxes were $78,000.
Mm-hmm.
And she was like, wait a minute. I said, listen,
Mm-hmm.
you made $500,000. What are we complaining about?
Mm-hmm.
I don't have the money. I said, that's a you problem.
Mm-hmm.
It's not a government problem
Mm-hmm.
because their thing is you made the money. So now we want a piece of that $542,000 that you made. Now we want a piece of it, you know? And what I tell them is, hey, if you're going to sell something, buy something else.
Yes.
So then that way, guess what? It softens the blow.
Mm-hmm.
If you made 500,000, then go ahead and buy a business. Do something that will help your money grow.
Mm-hmm.
Because you just sitting on it, you're gonna pay taxes. That's just what it is.
So you sell a house,
Mm-hmm.
and then you go right into another house. How does the tax work in that scenario? You sell a house, you gained on the sale, and you buy and go into another home. How does that? How does the?
You're gonna pay capital gains tax.
Oh, let you see.
Yeah. And see what they don't realize is, say for example, you purchase a house this year.
Mm-hmm.
You got to have that house for 5 years.
Okay.
Okay.
Mm-hmm.
Now, if you've got that house for 5 years, and it
Mhm.
depends, because like I said, the laws change every single day.
Mm-hmm.
You turn that house into an investment house.
Mm-hmm.
Now you're making money on that house, capital gains tax. Okay. But if you are in that house and you're like, wait, whoa, I've had my house 5 years. I'm about to sell it. Are you still in it? Yes, I'm still in it. Is it an investment property? No, it's not. Okay, so you should be okay, but there's a cap on it. There's a $250,000 cap for married, filing joint,
Mm-hmm.
but that number changes. So if you haven't made more than that, then you'll be good to go.
I see. I see.
So it depends on your filing status,
Okay.
and the numbers change every year.
Okay. Okay. So it depends on your filing status, and then how much gain, and then if it's under a certain threshold, then there is no tax liability.
Yes,
I see.
if you're still in the house. But if it's an investment property, it doesn't matter.
Mm-hmm. Mm-hmm.
So there's a time limit. If you buy a house and you haven't held that house 3 out of 5 years, then it's an investment.
Yes.
Okay.
Uh-huh.
But if you buy a house and you've had that house for 10 years and you're still in it,
Uh-huh.
then you'll be fine.
I see.
Okay.
I see.
But they always want a piece of the pie for everything that you do and everything that you make.
I see.
That's just the way it is.
I see. So, all right. As a person, you've shared some great things, and you begin to talk about home ownership. So, a person just coming out of college, and what advice would you give that person to begin to set themselves up financially to go into home ownership and go into that good direction for financial literacy and things of that nature? What good advice would you give to them?
The biggest thing is credit.
Mm-hmm.
We have a tendency to ruin it
Mm-hmm.
because in college, they will issue you a credit card just like that. Oh, you're in college.
Can I share something
Yes,
with you?
yes.
Can I share something with you? I definitely want you to continue. But it's a funny thing. It's a sad thing. I was ignorant.
Yeah.
I was young and dumb. And so I'm just graduating high school and discovered me.
Yes.
And they sent me this credit card
Yeah.
for, how much was it? $2,000,
Yeah.
I think it was. And I just was not literate at that time. I am now, but
You were
I
falling
thought that
out of
was
control.
my money.
You was
I
like,
thought that was
"This
my
is
money. It's
mine."
like, what am I going to do with this money? I mean, I got to use this. I know what I'm going to do. I'm going to buy this.
Yes.
I'm going to buy that.
Yes.
And just like that, I was at that $2,000 threshold.
And now you're like, whoa, I got a bill? Yeah, it's
Yeah,
not
we
your
got-
money.
Yeah.
It is not your money. My biggest thing is what you use, pay. You know, if you got a car for $2,000 and it's maxed out, you have already ruined your credit. Because guess what? Now they want you to be under 30%.
Usage.
Yes, we're not literate to that. So you know, one of my clients said, "Well, when I get upset, I shop." I said, "I want you to go in the room and turn on Netflix when you get upset. I want you to stay home, go in the room, close your door. You can even pray, but don't go to the store because now what we've done is we've set ourselves up not to be in a position because we've overextended ourselves. And we don't realize if you're paying a minimum balance, it's going to take you 30 years to pay that card off at a 29% interest rate. So what I tell my college students is it's okay for you to get the card. Okay? That's okay. This is how you build credit. But what's not okay for you to use the card and then turn around and don't pay the card off. My son is 20. His credit score is a 796 at 20 years old. But that is because at 16, I started putting him on my card. Swipe it, pay it, swipe it, pay it. He had to do nothing. Okay? Absolutely nothing. And so now I'm like, son, if you swipe it in 3 days, pay it. Because what that does is it builds your credit. We forget that we have to pay it. And then if you're working and you're in college and you graduate and you get this great job, okay? Hey, I got this great job. I want to buy me a condo. I want to go downtown. I want to live on 1/6. That's fine. You got to have some money in the bank, period. You cannot have overdrafts, period, because mortgage companies look at that. They look at how much income you have. You say, hey, I want to pick up a second job. That's fine. What they're going to look at is I am a teacher. I'm going to pick up a second job as a server. Okay? You got to be on that server job some years in order for that to count. Because they want you to be in the same field in order to give you credit for a teacher, after school teacher. That's the same field. Some mortgage companies will say, no, we're not going to allow this part-time income because you haven't been consistent with it or because it's not in the same field. So that's very, very important. It's also important that if you're trying to purchase a house, that 10% rule applies. And I tell people, if you make $50,000 a year, I need to make sure when you come in January that you've saved $5,000. I love that 10% rule because if you've saved $5,000, when you get ready to do something, then you'll have the money to say, hey, listen, I've got this $5,000 and I'm saving it every year, and you've got something to show for it. But if you spend every dollar that you make, you have nothing. So I'm trying to get us out of that mindset that we're going to spend every penny. You got to invest in yourself. You are your biggest investment. A house is a huge investment. Now, would I advise anybody to buy a house? That's between you and your maker. But right now, the interest rates are so high, it makes it hard. And now, us empty nesters, now our kids are coming back home.
That's what I keep hearing.
Because they can't afford a $1,500 rent. They can't afford it. That was a house note, you know, 4 years ago. Now $1,500, you got to have 2 or 3 people in the house. So it makes it difficult, and it makes it more difficult. I'm going right back in taxes. If you owe Uncle Sam some money, or if you say, I can't afford to have taxes come out, they taking all of my money. No, they're not taking all of your money. They taking the money that you owe them. So don't play tricky Ricky with your taxes, because guess what? You're going to end up writing a check. And it's a hard thing at 22 years old to write a check. And then you get a good job and you start making $70,000 as soon as you get out of high school or college, and you don't know how to deal with it. And that's where I come into play. Because if I've been doing your taxes since you've been 18, now when you're 22, you already know what to do.
Yes. So when you prepare taxes, you actually give some proactive information.
Absolutely.
And your clients are not, you're not trying to have a transaction with a client. You're trying to have a relationship with a client.
Absolutely.
And the relation is that you educate them. And in that education, as they continue with you, they're going to grow and develop.
Absolutely.
And you're going to be preparing them for the next season and for success, really, financial success.
And a lot of my clients, I've done the mom and dad. Now I've done the kids. And now I've done the kids' kids. So it's a generational thing.
Yes.
Because my thing is, it's about education.
Yes.
It's not about money with me. You know, God giveth. He's going to supply all my needs.
Right.
I want you to be educated. I want you to know what to do. And if I don't show you what to do, I've done you a disservice. It's not one of those, oh, let me just do this. No. And I'll tell you, in the beginning, when you come to me, you come to me as family. You don't just come to me as clients.
Mm-hmm.
You come to me as family. Any event that you have going on in your life,
Mm-hmm.
I'm going to be there because you're not just a number.
Mm-hmm.
You're something near and dear to me. So I want you to be educated.
Mm-hmm.
Because if you come in my office and you owe, now I'm upset.
Mm-hmm.
Because I feel like now I owe,
Mm-hmm.
or I'm questioning why you didn't listen. What are we
What did
doing?
I not say?
Yes,
What did I go wrong?
So it's one of those things. And somebody said, well, you know what? You don't play the radio. Not at all.
Mm-hmm.
Because I want you to be financially literate. I
Mm-hmm.
want you to not owe these people any money.
Mm-hmm.
I want you to leave with a smile on your face.
Mm-hmm.
And sometimes I might hurt your feelings.
Mm-hmm.
But guess what? It's out of love.
Mm-hmm.
Because if you're educated and you know what to do, and I tell people, my cell phone number is on my card for a reason.
Mm-hmm.
You don't have the excuse, well, I couldn't call you.
Mm-hmm.
You got my cell number. You can call me. You can text me. You can email me. You can TikTok me. You can do all of that stuff because I want you to be educated. And I don't want you to fall into the devices and the traps because if you end up owing the IRS $7,000, you're going to feel like it's impossible.
Mm-hmm.
But I'm going to give you a plan how to make it possible.
Mm-hmm.
So my biggest thing is don't file exempt.
Mm-hmm.
Get educated on what you're doing.
Mm-hmm.
There's never, ever I don't want to ask you. Call me, ask me questions.
Mm-hmm.
Because I'd rather you know than not know. And then we're faced with a situation at the end of the year that we can't fix.
Mm-hmm.
Everything is fixable with education.
Mm-hmm.
If you call me in February and say, hey, Leo, I want to make sure guess what?
Mm-hmm.
In January, you'll be glad to come see me because now you're getting a refund.
Mm-hmm.
Client today, he walked in there. I said, you're getting a refund. He was like, thank you, Jesus.
Uh-huh.
Because the past years he's been having to owe, but that's because when COVID happened and everybody was taking out their 401k money,
Uh-huh.
it comes at a cost.
Yes, yes.
So we didn't count up the cost, but now we're in the clear, but refunds aren't as big as they were. And it's not because of your preparer. It's not because of your CPA. It's not because of your accountant. It's because now the rules have changed.
Right, right.
So that's the biggest thing.
Right, right. Very, very good, very good. So you have a wide range of age groups that you serve.
Yes.
And so is there different advice that you give for different age groups?
The younger age groups, it's always call me, or text me. Let's look at your pay stub. Let's see what you're doing. If you have a change, let Miss Leo know what's going on. For the older, the seasoned saints, if you sell something, I need to know. If you lose something, I need to know. If you stop something, I need to know. If you getting a bonus, call me because I need to know. Because then you're going to call me, hey, Leo, we're getting a bonus. And I'll say, don't change it. Don't change it because now you're playing catch up. Or we're getting a bonus and my bonus is going to be $10,000. Okay, that's fine. But I just want you to know if you don't have those taxes coming out and then you owe at the end of the year, it's because you filed exempt. So I just want you to be cognizant of that. It ain't me, it's you. So they're just like, okay, if you're trying to buy a house or you're trying to upgrade, I need to know because I need to make sure you're in the financial situation that you need to be in. And you can't say, hey, Leo, I want to buy a house, but I got this side business and I done wrote off $1,000, $200,000. No, it doesn't. It doesn't jive that way. People are on TikTok saying, oh, I can start a business. I can do this. I said, let's talk common sense. Well, they said on TikTok, they said that I can go and buy a Range Rover and file it on my taxes. I said, how much is a car? Well, it's $80,000. How much does your business make? Well, it don't make that much.
15,000.
So how is it a business? Why does a $15,000 business need an $84,000 vehicle? So my next answer is no. What you mean? They said on TikTok, I said, no, that's not how you do it. Because guess what? Dollars have to make sense.
Yes.
And if it don't make sense, it ain't making dollars. So do not go out here and buy that $85,000 car and you telling the government, I only made $15,000 on my business. And people don't realize you can have a business 5 years. Okay, 5 years. They want at least 3 of those 5 years, they want you to make income. They don't care how much you make. But it's got to be a lucrative business. If it's not lucrative, then they will turn around and can turn around and say, hey, all this money that we done wrote off, now it turns into a hobby. And we're going to come back and recapture this money. So be careful what you hear. Be careful what you see. You can't just say, oh, I got a business, so I can not have enough taxes come out. A lot of times that's what people feel like they can do. Because I got a business, I'm going to take a loss. Well, when you're taking these losses and you're trying to buy a house.
Yeah, so now it's going to mess you up with your underwriting with the banks because they don't want a loan to somebody who don't make money.
There you go. But a lot of times we don't know that.
Because what they're going to look at is not your other set of books. They're going to look at what you filed.
That's it. Because your other set of books don't count. And if you're taking a loss, that money that you make, that $50,000, is really not $50,000 because you've taken a $13,000 loss with your business. So now you really only make $37,000. You ain't making no money, you know. Or Leo, I saw a house and it's $600,000. Well, baby, how much you made? $50,000. Well, you can't get it. Your DTI is out of whack. You don't have enough to get what you want. So sometimes we gotta pipe down our heart's desire, you know.
So they tell you, say, so Leo, why you being so negative?
It's not negative. It's educational. And that's the thing.
No.
Yes.
But the reason why I say that is because actually you're just telling the truth.
Yes.
But sometimes people will say that you're being, they will classify that a certain way because you're not telling people what they want to hear.
Exactly.
But you're actually telling them the truth.
Absolutely. And I've had clients to honestly leave because they did not want to hear it.
Yeah.
And you know what I said? We're just not a good fit because I'm going to tell you the right way.
Yeah.
You may not be able to deal with that. That's okay.
Yeah.
But at the end of the day, what you can say is, she told me the truth.
Yes.
I just didn't want to hear it. And that's okay because I'm here to make you a better financial person.
Yes.
And if we're not growing and knowing, then what am I doing?
Yes.
I said, what you paying me for?
You
paying me to help you get to a different level. So since you're paying me, take advantage of the pay that you're paying me. Let me educate you. Let me help you grow, move, learn, be a better person. You know, so that's the difference with what I do.
Yes.
It's not one of those, oh, you got 5 minutes or you got 10. No. Let's sit down. Let's talk. Let's see what your future goals are. Let's see what your plans are. Let's see what you want to do. There's never a dumb question. There's never too many questions. Let's get it done. So, you know, I love what I do. I love it. I really do. And, you know, I say, if I don't make a lot of money, because I don't, I love what I do and I love helping people.
Wow. Well, that sounds like we are in the same category.
Yes.
It's good to have a passion for what you do.
Yes.
And it's good to have a passion for serving people and loving people. And I like what you said, you know, you want to grow. Yes. And you want your clients to be developing in their ability and their growth. And so that's really fitting for this podcast, Growing in Grace.
Yes.
And I'm glad you came to share some of your time and talent and your resources and abilities with us today. But I would like for others to know about Lou Walker and her services. If you would like to contact her, do you mind if I give you a number?
I don't mind at all.
Okay. Her number is 678-933-4475. And she is a CPA, and you've been practicing for how many years?
16.
16 years. 16 years. 678-933-4475. In Touch Tax.
Yes.
In Touch Tax. And one more time, I'm going to give that number one more time. Because some of y'all was scrambling, looking, trying to find a pen, and the paper's over there, and the pen is, who knows. One more time, 678-933-4475. And I've enjoyed talking with you.
I have had a wonderful time.
Ms. Walker.
Thank you.
And I would like for you, all the listening to us today, to like, share, subscribe, and share with your neighbors, your friends, and whosoever will, and help them to get in touch and know what their how to navigate through this season.
Absolutely.
There is resources. There is help.
There is.
You don't have to go at it alone. I've made some mistakes going it alone. And if you want to do some better things, you might want to get in touch with In Touch
Yes,
Tax.
that's it.
And so we thank you, we appreciate you, and I'm going to ask you to come back next week for the next Growing in Grace podcast. God bless you, and may heaven smile upon you until next podcast. Thank you.